Shares of Tesla fell nearly 5.5% after the company missed revenue expectations in its third quarter earnings report. However, despite the plunging stock price, Tesla investor Cathie Wood is constantly taking up more Tesla shares and buying heavily on the dip. Wood believes that Tesla has the potential to perform better than many of its competitors in the near future. Hey guys, welcome back to Everything Tesla Stock. A day after Tesla released its third quarter deliveries, Cathie Wood scooped up a combined 132,213 shares of Tesla, representing a stake worth about $32 million based on the stock's price at closing time. Shortly after this, the Tesla investor disclosed via a flagship ARK Innovation ETF that she had again bought 66,190 shares of Tesla, valued at approximately $13.7 billion. Cathie Wood sees a lot of growth potential in Tesla and believes that now may be the best time to buy the shares. Why is she buying more of Tesla's stock despite the plunging stock price? Keep watching to find out, but before we get into it, don't forget to like and subscribe and ring that bell notification button to keep up to date on anything going on with Tesla. So here are 4 possible reasons as to why the stock investor is currently buying at the dip. Number 1. Tesla has incredible growth. It's no news that Tesla is leading the EV industry, both in terms of revenue and growth margin. The automaker ranks first in the EV industry, and is the largest automaker by market cap. Tesla has, over the years, built up a solid growth margin, which is almost impossible for other companies in the industry to catch up with. Aside from being a revenue-driven car company, Tesla is also focused on adopting a sustainable means of delivering cars to its customers. The car company's deliveries recently fell short in the third quarter of this year, and Tesla claims that it's an issue of logistics rather than demand. Tesla delivered 343,830 electric vehicles, which was by far way higher than the number recorded in the previous year, but was less than what analysis predicted of 359,162 vehicles for the third quarter. For this quarter, Tesla's deliveries fell short of its production value of 365,923 vehicles, which is rare for the car company. The automaker has previously seen its deliveries higher or similar to production in the past quarters. Therefore, the significant difference in these variables is further highlighted already by existing fears of a drop in demand. Responding to this, Tesla disclosed in a statement that with production volumes growing at a fast rate, it is becoming increasingly challenging to secure vehicles' transportation capacity, especially at a reasonable cost. This is not, however, the first time that the automaker is struggling to keep up with deliveries owing to high demands. Musk stated sometime last year that Tesla was having a crazy wave of deliveries at the end of each quarter, majorly because its Shanghai factory makes cars for exports to Europe and other countries in the first half of a quarter and then proceeds to manufacture cars to be sold in China. According to Tesla, changes at its production process have led to an increase in cars in transit at the end of the third quarter. While speaking on Tesla's current logistical issue, Musk has stated that the car company is smoothing out the end-of-quarter delivery wave to reduce expedited cost and relieve stress on the Tesla team. Tesla also aims to achieve steadier deliveries intra-quarter. According to Musk, customer experience suffers when there is an end-of-quarter rush, which is why Tesla is focused on adopting a more efficient method to deliver its cars to customers. Number 2. Demand is not increasing despite a price hike. Despite the price hike for some of Tesla's cars, the company is still recording high demands for its EVs across all markets globally. In June, Tesla raised the prices of its car models in the United States in response to persistent global supply chain problems and soaring raw material costs. Although the shortfall in Tesla's deliveries in the last quarter had led to demand worries among investors and analysts, Tesla has claimed that it has no demand problems. JP Morgan analyst Ryan Brinkman said that while Tesla continues to point to supply constraints as limiting deliveries, the potential for demand destruction looms large. Several analysts also claimed that the increased production prices for Tesla vehicles and a dull outlook for global economic growth signals a serious downtrend in Tesla's car demand. However, Musk has stated that demand is not Tesla's issue. The Tesla CEO added that even before there were supply chain issues, Tesla's demand exceeded production. Likewise, during a conference call in July, Musk said that Tesla did not have a demand problem, but a production problem. He did, however, acknowledge the possibility of macroeconomic uncertainty and how that can have an impact on demand for Tesla EVs. No doubt, the global production of EVs has been slowed by shortages of key materials, including semiconductors, and it is unclear when these issues will finally subside. But despite supply shortages, Tesla has been able to ramp up EV production to a significant level, and the car company has at some point in the year announced that it will stop taking for some of its cars. Earlier in May, Musk disclosed that Tesla may stop taking orders because of delivery times and how they're starting to stretch to more than a year. According to Musk, Tesla's demand is now exceeding production to a ridiculous degree. He added that, to this effect, Tesla may probably start limiting or holding off on taking orders for anything beyond a certain period. Number 3. Tesla to increase production on batteries. Following the release of Tesla's Q3 2022 financials, the car company gave an update on the progress of ramping up 4680 battery cell production. According to Tesla's CFO, Zachary Kirkhorn, the 4680 battery cell ramp is going well, with total output up 3 times quarter over quarter, and production is tracking to exceed 1,000 car cells per week in the fourth quarter. Although Tesla's Q3 earnings and deliveries may have fallen short of some analyst expectations and estimates, Tesla promises an incredible Q4 this year. According to the automaker, it's set an ambitious target to produce almost 495,000 Model Y and Model 3 vehicles in the fourth quarter of this year. These two models account for about 95% of Tesla's output. Tesla also plans to boost its already high gross margin in 2023 as newer factories in Austin and Berlin ramp up production. Despite the discouraging global economic growth, Tesla aims to raise production to a higher level in the fourth quarter. If Tesla can meet its production forecast for the year, it would put the automaker on track to meet Musk's goal for production in the coming quarter and will likely put Tesla close to the scale of the German luxury automaker BMW by the end of 2023. Musk aims for Tesla to reach 1.5 million units in 2022, and if successful, a production increase of over 50% for the year for Tesla. This production plan could also see Tesla blow past projected growth in the global market for auto companies by a close factor of 10 in 2023. Tesla's fourth quarter is looking surprising, and Cathie Wood, just like any other Tesla investor, is optimistic for a productive quarter. And the massive shift from gasoline-powered vehicles to EVs is one other factor that can boost Tesla's growth in the coming years. Number 4. Profitability is strong at Tesla. Between April and July this year, Tesla accumulated a gross profit of $3.9 billion from sales of its EVs, including $344 million in regulatory credit income. Despite reducing prices for electric cars in some of its markets, Tesla still keeps up with its profitability. The car company recently cut starter prices for its Model 3 and Model Y cars by as much as 9% in China. This is rather a different trend as opposed to the numerous increases across the industry amid signs of softening demand in the EV market. While Tesla is focused on manufacturing top-rated EVs, the car company also aims to make these cars affordable. Musk recently announced that Tesla's engineering team had turned its focus on a next-generation electric car platform that will be half the price of the Model 3 and Y platform. According to Musk, this is the primary focus of Tesla's new vehicle development team. He also added that the moment Tesla is done with engineering for its Cybertruck and semi-truck, well, it's soon gonna then focus on bringing this next generation of vehicle to life. And according to him, long-term aspirations for Tesla remain to deliver 20 million EVs a year by 2030, compared to just 1 million in 2021. To achieve this, Musk stated that the idea is for Tesla to replace at least 1% of the global car fleet per year, which is where the 20 million units of Tesla are placed. He also thinks that Tesla can replace about 1% of the global fleet of 2 billion cars and trucks per year. While this is ambitious, Musk does think he's got a good chance of getting there. But what do you think? And don't forget to let us know what your Tesla valuation is. While you're still here, go ahead and click on this next video on your screen to see what Tesla's been up to in the last few days. See you there.